The reason we're kind of in this mess is because we didn't let the economy suffer during COVID. At some point, economies need to suffer and reset a little bit, shake the dead wood out of the tree, and then get going again. And the Reserve Bank and the government at the time were like, nah, let's just keep making sure that this thing keeps going. And that's why we ended up where we are now.
We are back in your life, and today we are giving our OCR prediction. The GDP number came out for the last quarter. It was twice as bad as what was forecasted. We've got Matt Harris in the hot seat as well. Gents, OCR announcement.
I mean, my opinion always comes for free, and I've got a lot of debt. So I'm going to take a big punt on this one.
The Reserve Bank for quite some time now has been pretty cautious. Right, like you know, they really went over the top with the stimulus during the COVID era. We had a pretty big hangover after that with the high interest rates because of the inflation, and now we've got a new governor. So it'd be interesting to see what her take is on it and where her kind of, I guess, leadership steers that official cash rate.
Well, let's talk about the new governor a little bit. So, Matt, I mean, there's 6 to 8 people on the RBNZ board. Does one person make that much of a difference, you think?
No, and I was just thinking, Mike mentioned the new governor. I was thinking, like, good for her and good luck. But are they really just a passenger in the cycle of the economy? They influence it directly for sure, but the economy is down. They have to loosen. The economy is up. They have to tighten. It's 2-speed.
Well, but there's decision-making that's required, right? And I think, I assume you would agree that some of the decision-making historically has not been good.
Oh, 100%. Yeah. And I think it's New Zealand Inc., the decision-making has not been good over the last 4 or 5 years.
Yeah.
We are really failing in lots and lots of different areas. And I was just in Australia recently, our bigger brother, and the difference in the last 100 years in Australia versus New Zealand is actually really staggering. They have gone ahead in nearly every area. Some of it not so good, but overall they're bigger, more widely recognised in the economic community, better looking. They seem to have a lot less tall poppy than we have.
I hate that.
They seem a lot more willing to punt on infrastructure projects, on things that like New Zealand has a little go at, but we kind of shied away traditionally at. So back to the OCR, I would love to see the RBNZ and the new governor, back New Zealand. Let's drop the rate significantly. Let's get the economy going, get it humming, and then start to actually manage it properly.
Well, I guess it's the question, Mike, is like, so we're, 3 years into this really tough market?
Yeah, we are.
And the forecast was the economy is going to go back 0.4%, and it went back 0.9%. Why on earth would you not drop 50 basis points on Wednesday?
I mean, it's wow. Why would you not drop 50 basis points at the next OCR announcement? I don't know. Like, I honestly can't answer why you wouldn't. I know why they are cautious about where they're taking the OCR and where they're tracking it, and that's really simple. It's inflation. And I can assure you that no matter how much you think the last 3 years have sucked, if you were to put the same amount of inflation in the economy, inflation is 1,000 times worse than a recession. I can absolutely assure you of that. And if just like rock bottoming the official cash rate is not the response to try and get the economy going, you do need to drop it, and you got to drop it significantly from where it is. But how long you keep it low and how low it goes, I think are the two measures that they need to get right.
But before the end of the year, right, there's going to be 50 basis points worth of cuts, right?
One way or another, right?
Yeah, the question is, if that's what's going to happen before the end of the year,
do it now.
Yeah, why would you do 25 and 25? Why wouldn't you get on with it to try and give just a little bit of love?
Because it's a signal to this is my opinion, every time they make a cut, it's a signal to the economy of a better time in the future. And the data, Mike will know the data, but the data is that something like, there's 50% of it's all fixed for a certain amount of time in the future, regardless. So that 25% doesn't make a difference.
Yeah.
Also, banks, sure there's got to be some sort of commission on this at some stage, but banks don't pass the rates on immediately. They hold on for weeks and weeks and weeks. They'll tell you it's the money markets and that it's all priced in, and there's an element of truth in it. But every time a bank makes $1 billion in profit a year, you go, oh yeah.
You're a man of business. If you can make $18 million a day, do you know what's better than making $18 million a day as the banks in New Zealand? $19 million a day, and you got to respect it.
I do respect it, and I think I very much believe in free market, but if the free market results in a whole lot of people who are suffering, maybe there's a discussion there that has to be had where maybe the profits should be $17 a day and not 19.
Yeah, I think the interesting thing there you inadvertently point out is the reason we're kind of in this mess is because we didn't let the economy suffer during COVID. At some point, economies need to suffer and reset a little bit, shake the deadwood out of the tree, and then get going again. And the Reserve Bank and the government at the time were like, nah, let's just keep making sure that this thing keeps going. And that's why we ended up where we are now. I think there should be a 0.5 cut straight away. Let's just get this thing going because we've been stuck in this cycle for way too long now. But, the other thing they've got to weigh up there is kind of some of the global pressures, right? And we're seeing in the States now a real danger that they're going to get into stagflation territory, where you've got high inflation and unemployment increasing. And that is very, very difficult to get out of, because if you drop the official cash rate to improve the unemployment, that inflation is going to keep going up. If you increase the official cash rate or the Fed rate to slow down the inflation, the unemployment's going to go up. So it's very difficult to balance.
New Zealand's gone through such a crap time. And you look at the US and you look at their stock market, you look at their economy growing, and you go, everything, nothing lasts. Good times, bad times don't last. Hypothetically, if the US went through a bit of a tough time, like you're potentially alluding to, and New Zealand is a small island nation,
we get affected.
And imagine that combo of we've, by ourselves gone through a really tough time, and then it happens to the rest of the world, and we continue. That would be so depressing.
It would be, because it's been a really long 2 to 3 years, and it's so refreshing to see a 4% interest rate. Yeah, it's a 4.5, is it 4.49?
Yep.
Something like
There's
that.
There's a 4.49 out there at the moment. Yep.
It'd be great to see a 4.00 or a 3.99, but it feels like better times are ahead. And back onto the US stock market thing, pundits have been talking about that thing collapsing for the last 2 years. It just seems to belie belief.
If we talk about 50 basis points, does anybody disagree that we will see 50 basis points worth of cuts by the end of the year?
No.
I think that's pretty much priced in.
So I think the question is, Mike, we're seeing quite a few of the banks come out at 4.49. Have they already priced in what's going to happen on Wednesday?
Yeah, I mean, the Wednesday cut is basically priced into the market. There will be some slight adjustments after the official cash rate announcement, as there usually is. But basically, the rates you're seeing now have that 0.25 priced in. We actually saw the wholesale price of money fall off a cliff a few weeks ago. And that was really interesting. It was just a really sharp drop overnight.
I bet you were frothing.
Oh,
real
straight on the phone
stuff.
for all the other brokers.
Yeah.
That's a great group chat.
Yeah.
But it is like you said before, right? It's there are a number of factors that dial in to what your home loan interest rate is, right? It's not just the official cash rate. It's, the price of money, the margin, the bank, the risk, all of that sort of stuff. But, I do think there is scope for more to be passed on and for it to be passed on quicker.
You know what I was just thinking, which, the America thing's still on my mind for lots of different reasons, but Americans, when they get mortgages, they lock in for 20 to 30 years.
Yeah.
And that might be part of the reason why they always have disposable money to get their stock market going so good.
Yeah, it's interesting when I talk to them when they're coming to New Zealand or buying properties, and they're like, what do you mean? What do you mean the interest rate changes? I'm like, why? Every couple of years. And they're like, why would they not? That seems so unpredictable. Why would you not just buy it for the 30 years? I'm like, yeah, mate, if we could,
and
we
if
would.
you think about the average Kiwi's financial decisions in a year and a decade, it all revolves around the interest rates on their mortgages.
Yeah. In the US as well, people that bought a house in 2020 where interest rates were really low,
they don't shift.
And they just I'm never going to leave this house.
Yeah.
Imagine it'd be really interesting in New Zealand. Everyone's always about having the bigger box to live in and those sort of things. Would you move if you had to let go of a 1.99% interest rate? You wouldn't.
There's no way.
Yeah. You'd actually eventually it'll be like, oh, I'll deal with that drive into town every day.
Yeah. And it must influence behavior.
Yeah, cool. Okay, well, what I'm keen to move on to is, I guess, what the OCR cut and lower interest rates mean for New Zealand, and we will do that after this break.
If you're listening to this and wondering what lower interest rates could mean for you and your household, get in touch with the team at Lighthouse Mortgages. Whether it's refixing, restructuring, or using equity in your property to go and purchase an investment property, Lighthouse Mortgages can help you today. Click the link in the show notes below. Now, back to the episode.
So a 1 year mortgage rate's at like 4.5%, right? If we actually like just pull this out a little bit, we were at like 7.5%, 2 years ago, and we're at 4.5%.
I remember.
And I remember you cry yourself to sleep every night. You'd
Pretty
say
much.
one day it would get better. Now it's a little bit better, but still doesn't feel that much better.
Nah, it doesn't.
On $1 million mortgage, you've gone from paying $75,000 a year to $45,000 a year in interest. I mean, it's got to make a difference at some point, right? Like, this is such a huge movement. It doesn't feel like it because we're living in it, but it's a huge drop in interest rates.
It definitely is making a difference in the economy. And again, you've just got to remember that not everything kind of reacts straight away. You know, to Matt's point before, a whole lot of mortgages are fixed for a certain amount of time. I think it was September this year was kind of one of those great refix events where we had a whole lot of mortgages rolling off and a whole lot of people going from higher rates to lower rates. So we've just gone through that. It was a pretty busy time out there in the market. So what you'll start to see now, I think, is actually, you know, those incremental cuts start actually making a difference quite a bit quicker in the economy. Because going from 7.5% to 6.5%, yes, you know, on $1 million mortgage, you're dropping 10 grand. That's still quite a bit of money. Now you're getting down into those 45,000 of interest, you know, 40,000 of interest, maybe 50,000. For your average salary in New Zealand, that is where the difference starts to matter.
I've gone from really miserable to a little bit miserable to life's kind of okay. Is that how you describe it, man?
Yeah, and I really I've got a heap of money rolling off in December, and I just know it's going to make a difference then. So some of my stuff's rolled. Some have actually just left at the same repayment level, which is, you know, around the 5.5%, because I just want to get a little bit ahead on it, given the market that we've had where I haven't made the capital gain that I would like to. But in December, I know there's a heap coming off, and I know it's going to actually make a big difference. Once we get down to a low to mid fours.
4.2s, 4.3s.
Most of the people, my portfolio, most of our clients go back into the neutral to positive.
For your average Kiwi, like if you just think about that threshold of what they can actually go out and spend a bit of money in the economy, we're starting to get down there. And we're seeing it also in the housing market. You know, over the last kind of few weeks and months, we're starting to see more activity, more sustained growth, more sustained pressure on like prices. So, you know, all of that leads to we're about to hit that sweet spot.
Well, let's talk about the property market a little bit. So by the end of the year, what do we think? We'll be at like 4.2% for a 1 year? Is that your prediction?
I think maybe 4.3. Yeah.
Okay. So 4.2, 4.3 by the end of the year. At some point, the property market has to move. Historically, it's always happened. It is taking a very long time to move to the point that people are now saying to second guess whether it will ever
property work anymore.
Will it ever move?
Yeah.
If we're like somewhere around like getting closer to those lower fours, and then we're moving into summer, people have been holding on. There's all of these people who have been waiting to like have enough equity to be able to upsize or whatever. What do we reckon is going to happen to the property market over summer?
It won't happen until about March next year, in my opinion. But when it goes, it'll happen real quick.
I think March next year is when we'll start to see some movement. I don't think it's going to be as quick as Matt thinks. It's probably where our opinions differ a little bit. But I would say that you'll start to see those sustained house price growth quarter on quarter on quarter.
The interesting thing about that, though, right, is like it's kind of like when you look at housing prices over time and they go up and they kind of went down quite quickly. The OCR went up and it went down. I wonder if the same thing does happen with the property market with what Matt's thinking. I do understand why you're thinking that, just because of the sentiment of people being on high interest rates, being a little bit more cautious.
The other thing is, but remember, the price that people can take to sell their house a lot of times hasn't gone down with the market. You got to remember that is like, just because the value of their house on paper is dropping, the price that people can take when they sell because they bought at a certain time hasn't necessarily dropped at the same rate. So trying to get the vendors to match the market has been a real issue for quite some time now. And I think when we're like March next year, when there's more activity, you're still going to see vendors wanting prices that are just a little higher than people are willing to pay at that point. I think maybe later in the year, those prices will catch up to where the market's at, and that's when you'll see it ramp.
Michael, a vendor wanting more than the market will pay. What a ridiculous statement.
Yeah.
Hey, you know what
Or
is
needs.
true?
A vendor needs more because they're mortgage.
He needs
I
it.
need
Yeah,
money.
yeah.
Yeah.
But what has remained true through the high interest rate environment, and will still be true when you have low interest rates, is that New Zealanders' financial literacy is still really low. If there's something to invest in, property is at the top of the list.
Yeah.
Because it's understood, it's trusted, and it's easy to access, and that will still be the case when money becomes cheaper in March next year.
Yeah.
And that's why one of the reasons I think it will go again, because nothing's changed in this country.
Yeah.
Okay, well, let's get to it. We're gonna stitch this up together because I want to know predictions for Wednesday. What are we calling?
0.25.
0.5.
I'm 0.5 as well. Michael,
Do better, Michael.
do better.
better.
Cool. Okay. I mean, Matt, you mentioned about how financial literacy in this country is relatively poor. There's only one way we're going to make it better. You subscribe, you review, you like to checks and balances. More people see it, and then we can make New Zealand a better place. We'll catch you next time.
Cheers.